Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, December 14th through Friday, December 18th, 2009. Well, last week again was a very choppy week, and we've been in this cycle in the markets where it's just been choppy, 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 week after week. In fact, 4 weeks in a row now. If you look at the daily chart, you will see that the market again topping out just around 4 weeks ago, and it's gone a little bit higher intraday, and we've made higher highs, but ultimately by the end of the day, we always seem to sell off, and we always hover around that Great Wall of China. We're either a little bit above it or below it, and in 4 weeks, we have yet to confirm, and that's the in the money stocks confirmation signal above the Great Wall of China. Now, it was interesting. On Friday, we were looking to see whether or not we did confirm, and the high on Friday, in other words, what we had to confirm above with a close, was 111.12 on the SPY. So here's your 111.12 right up here on Thursday. So what we needed to do was close above that level on Friday, and should you have done that, you could have confirmed a move up to about 112.30 by 112.50 on the SPY. However, what did we close at on Friday? We closed at 111.11. So kind of interesting there just to note that, how you closed 1 penny below confirmation, or 2 pennies really, since you had to close above, but you did not confirm the move. And that's really been the name of the game recently, folks. As I mentioned, choppy, and we have yet to confirm up or down below the Great Wall day after day after day for the last 1 month period. So when you do not confirm, what it generally means is that you're going to just be wishy-washy back and forth, chopping up, chopping down, going back, going forth, and that's exactly what the market's done. So again, you can see that on Friday. Really, for the last 3 days, we've had little bit moves up of the week. You had Wednesday, Thursday, Friday with about a 60-point move on the Dow. However, on Friday, which was kind of interesting, the NASDAQ, the tech-laden NASDAQ, was actually flat to slightly negative, with a lot of key stocks in the NASDAQ, the main ones, the leaders, if you would, selling off. So we had Apple down $1.76, and let's go on the Apple chart here and type that in. We'll dissect this a little bit. And what's so beautiful about this chart, folks, is that the Apple chart is actually a beautiful in spirit of bear flag going into next Monday. So it's going to be interesting to see how the intraday 10-minute plays out. But you can see very, very clearly, look at this nice down move. And then if you take this low right here and just extend it right underneath, you can see inside bars, inside this big move down, sideways movement. Ultimately, you can see a little bit of a dip there to the 200, which obviously is support. But the market, again, on the Apple computer here, holding that nice little bear pattern. Now, again, we'll have to see how that plays out coming into Monday, but I just want to point that out. I do find that interesting to see that pattern. Again, that is an in spirit of bear flag, which is a bearish pattern, obviously. Now, again, you can learn all these patterns, all the pricing, all the methodology by joining the Research Center, by joining the chat room at InTheMoneyStocks.com. Now, let's go on to Amazon. Amazon's another leader. Amazon's been an unbelievable runner of late. I mean, ever since the earnings, it's just up and away. I can show you the daily quickly on this chart, and here it is. Let me just bring that up. But what you can see here is, here's your earnings, and it was already climbing into the near 100 level, but on earnings, the gap up, and look at that move up it's had. Truly unbelievable. And one thing that you want to note here on on Amazon, is if you take this low and just extend it down to the secondary low, see this connector from this point to this point, the low to the low, and right through the bottom there, that actually will tell you that that's a major support line. And sure enough, look, you hit it 2 days ago or so, and you bounced, and you held that line. Now, if that line breaks, folks, this Amazon could actually see a nice little dump, at least down to this point. I would say this would be your target right down here, which would be at around 128 on the chart. So again, just to give you an idea, that would be at level. If you want to just know another level on Amazon, for those of you that are interested, you can see this level right here on Amazon at 122.60, and then ultimately gap fill right here and into the just above the 50 moving average at around 120. Those are your levels on Amazon should this trend line break. And again, I'm giving you guys a little extra on this weekend analysis report, but you can see right here, in fact, there's a little bit of a pattern development of a kind of what we call a channel. And a channel is basically 2 parallel lines that connect. 1, 2, 3. Underneath 1, 2, 3. So you can see parallel lines, and the lines I just drew in are parallel. And again, what you're doing is generally this pattern will break to the downside. Now, it doesn't mean you're not going to go back up and test the high again and hit the upper end, but eventually this pattern will break to the downside. All right, there's usually about a 90% success rate that a channel that is angled to the upside will break to the downside, and vice versa. If you have a channel that is like this, all right, channel like this will eventually break out like that. and go to the upside. All right, 90% success rate each of these, and that's very, very high success rate. I mean, you go to any casino with those odds in your favor, and you're going to be very well off in not too long of a time. So it's important to know the success rates of different patterns, time frames, and all that other stuff. Again, whether we're talking about confirmation signal that we've developed in the money stocks, which by the way is about a 90-95 success rate if you know how to use it correctly. These things, again, tell you whether or not to take positions, because if you can tell me that I have a 90% success rate of going long or short and making money, I'm doing that trade. I won't even think twice. I'm doing that trade. So again, Amazon, very interesting chart as you've just chopped up and chopped down inside this channel. And again, we want to see here, do we break? Now, you have a little bit in spirit of bear flag right here, too, on Amazon, which could tell us maybe a break next week. Now, next week is also Options X, so it's something very important to watch. Now, lastly, what I want to just touch on is Google. Now, Google's an interesting chart because Google really has not had a fall. It's continued to hover near the 52-week highs. And the one thing that you want to keep in mind about Google is that it's so close to the even number 600, and there's another play that we've developed in the money stocks called an even number play, that sometimes there's a high decent chance, I'd say about a 70% chance that Google needs to go touch $600. If it touches 600, I think there's a high percentage chance that it's a short after it breaks that 600 level. Maybe it's 605, maybe 610 or something like that, and that's a good short, maybe back to 570 or so. But the point is, again, that even number play is telling me that there's a decent chance, and so I wouldn't necessarily, of all the charts out there, I'd be more likely to probably be shorting some of the other ones until we see a breakdown. Now, if Google, all right, let's do another line. Look at this. Look at this, guys. Seek and you shall receive. You can literally find these, and I'm doing this live as I give you guys this video. If you take this low pivot, and actually this pivot extends all the way down here, look at this. And there's another one right there. That would be your next line to watch right here. And then let's draw another one. Yep, these are your two lines. So again, I'm giving you some new support lines. If Google breaks this line and confirms a break of this line, which is essentially the 20 moving average, but you can see I'm taking this low pivot to this low pivot. If that breaks, then this goes right here. Where is right here? The 50 moving average. So kind of interesting to see how that line tells you that the 50 is going to be very strong. So I just want to make sure, whether you touch 600 or not, again, if you touch 600, break 600, I'd like the short. But if you don't get there and you break and confirm a break of this green trend line I just put in, this is your target right here. And it should come down and touch that. Right now, that's sitting at around 560 or so, 556, 560, right in that range, which would be a nice fall. Don't get me wrong, that would be a nice little dump on Google. So again, I'm just showing you a couple of the stocks that were actually down on Friday, even though the Dow and the S&P were up pretty nicely, basically 0.6%, 0.4%, right in that range. The NASDAQ was actually slightly down on the day, and you can see why. Amazon, RIM, Apple, Baidu, Google, all down, and those are tech leaders there. Now, let's go to the SPY. I want to touch on a couple other things here. You can see all my lines. Going into Monday of next week, you have to, first of all, know that the Federal Reserve is meeting next Monday, or next Tuesday and Wednesday. It's a two-day meeting. You have to be on watch for that, because whenever they give their rate decision, it's going to affect the dollar. And you want to know whether or not the dollar is going to come down. If the dollar comes down, markets go up. If the dollar goes up, markets come down. That's really been what it has been intraday. Now, again, depending on where the more dollar gaps or gaps down or gaps up. But from the intraday period, starting at 9:30, if the dollar upticks, markets come down. Dollar downticks, market comes up. Okay. Now next week we also have some data. PPI coming out, Empire Manufacturing, capacity utilization, industrial production, building permits, housing starts, CPI, crude inventories, FOMC rate decision, initial claims, continuing claims, leading indicators for the Fed. That's all next week. So there's a fair amount of data next week on options next week to keep us very, very lively. And the market should be a whippy. And I think there will be some good short-term swing trades. There's some that I've talked about to the premium members to be on watch for next week. And I think that's a high key to knowing what to do. All right, right now the swing trades are a few days long. That's what they are. Now we'll get into a period where they're going to be a little longer, but right now, for instance, the short on gold was a beautiful call. We nailed that gold short, and I'll show you the daily GLD chart. This is where me and my crew and all the participants and the premium members of In the Money, and you can become one, by the way, by just signing up for the Research Center. You get this call. You got this call in the Research Center and in the chat room. All right, picking up DZZ right here, which is 2 times short gold. Right up here. This is where we did it, and look at the fall on that. I mean, talk about a huge call right there. A major dump, major call. When everyone else was talking about gold going higher and higher, we were stepping up, shorting it, and we nailed it based on our methodology. Now, again, going back to the SPY intraday here, let's go back to the 10-minute chart. You can see you're hovering right here. Here's going to be your resistance come Monday on the upside intraday. That's 111.40, 111.35. That's going to be resistance. That's the high of the day. If you get through that, you're going to look for 111.50 will also be a major level to watch. On the downside, you'll have a little bit of resistance, support right here at 110.85. If you break that, you're going to look for the low of the day double bottom at 110.60, and then ultimately this 200 moving average at 110.45. If you get through that, you're talking about the upper Great Wall of China coming back into play. Here's your Great Wall of China. This has been an unbelievable level that we discovered, and ultimately just above that at 112.30 to 112.50 is the Iron Curtain on the upside of the SPY. These are major, major things to be aware of, folks. All right, projecting out to next week, you have to go the fact that it's options X, the fact that we have not confirmed yet, you have to think the markets are going to be relatively whippy again. That means a couple days up, a couple days down, trying to get as many players in the puts and calls to get out and just give in. And then ultimately on Friday when options close, they generally try to close the strike prices or the stocks, for instance, of Apple, wherever the most puts and calls are, they'll close it, try and close it right there to make sure that most of those expire worthless. So the institutions, remember, it's a game. It's a rigged game, guys. Understand options, all right? If you hold it to options X, understand that the big money is going to try to push it so they take all the premium, don't have to pay off any of the winners or on either side, puts or calls. So again, understand that, folks. It's very, very important to do so. In addition, what I just want to draw on here, guys, take this line right here. You have a little bit of support. Take this low pivot point here to here and to here. That's also telling you that there's support right here. It's also at the 50 moving average. If you break that, I do think you'll test the double bottom on Monday if you get down there, and possibly the 200 moving average. Upside, we'll have to see. Again, volume should continue to be lighter and lighter as we get into the holidays. And again, I hope everyone has a fantastic holiday coming up, whether you're looking towards Hanukkah, which is again we're in the midst of